please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Headline indices will tell you about this downward trend. I mean, individual stocks are really bouncing around. Sugar, for instance, is suddenly making a big move. Balrampur Chini, Dwarikesh, these stocks are just going through the roof. We'll just discuss them with Mr. Tulsi in a moment. Many of them are reaching the highs of the day. AB Fashion and Retail is an astounding stock since the numbers came out. It's up some 45-46% in August itself. A lot of people, a lot of PMSs are talking about this stock. That's the move that it's making today. Pull up a 1 year. You'll see what I'm saying. In the last 3-4 weeks, it's just been sort of tearing through the ceiling. So lots of stocks that are still bouncing around in an otherwise listless market. Let's get some more trading ideas in. Sandeep Agle is with us on the show. Sandeep, what are you working with as you get into the weekend?
Afternoon, Surabhi. A buy in a BHEL, stop loss of 75, target of 87. And buy in a JSW Steel, stop loss of 345, target 363.
Okay, Sandeep, thanks a lot for those trading ideas. This move in sugar is getting quite big, as Surabhi was also pointing out. Mr. Chan, any thoughts on why we are seeing this kind of move?
See, Anuj, because the government has extended the release mechanism till December, and that will keep the prices firm. Because if the release mechanism is dismantled or the release quota is removed, then you will see the selling of the sugar stocks, held by the mills, seen coming in the market, and maybe ahead of the festive season, because now post this Raksha Bandhan, we see the festive season starting, Janmashtami, Ganesh Chaturthi, and then Navratra and all sort of things up to Teen. And the crushing will only now start in the month of November, because this time the monsoon is likely to get extended. So maybe and because Diwali is also on the 7th November, so crushing will not start before 31st October. So this is just the release quota having extended till December is helping the sugar stocks. But we won't be initiating any fresh buy call. In fact, we have been advising that use this rally to exit from the sugar stocks.
Okay, so that's an exit advice by Mr. Tulsi on sugar. A word on Titan, another stock that's not quite been in step with the whole consumption blitzkrieg that we've seen, Amrish. It's sulking today, 888, such a range-bound stock. What would your sense be now?
No, clearly with even the management not really so bullish on the growth, and again we should see that much before the other consumer stocks really had that move. Titan has been having that move for the last possibly 7-8 years. It's already done that. The expectations were very high. It did well even after the issues which are there in the jewelry sector, saying that this is one stock which will possibly stand out. But then I think since most of that move has been done and the expectations have not really been fulfilled, I mean, again, when I talk of expectations, I would say the heightened expectations were not really fulfilled. So I think it should, correct a bit, consolidate a bit at lower levels. But again, this is a portfolio stock, so I don't think there's any hurry to sell it off. But don't really expect the sort of move which we have seen in the last couple of years to continue.
Amrish, your thoughts on Hexaware after the block and the fact that this overhang is going to stay now for some time? Yeah,
but then I really don't track Hexaware so closely, so I really won't like to comment on that.
Mr. Tulsian, your thoughts? Of course, the market has concerns now, valid concerns that bearing will not stop here and will take it to 51%. Last time Hexaware reached these levels, it turned out to be a good buying opportunity. Your thoughts?
So in the morning also have said that probably we look up at a level of 113 where this should be given, this should be looked into as a buying opportunity, because if you see for CY19, the performance is seen to be with 10 piece of closure about 24-25. I think this is an excellent mid-cap IT stocks, and even if I take that bearings will come, nobody stops, because we know that private equity investors are all seen coming in for the profit booking, but they will not bring it down below 51%. And if the bearing has to sell the further lot, they will not be able to do that for the next 3 months, having sold now today at off about 8.5%. And in fact, these stocks, swiftly, we have been talking of this Mahanagar Gas Limited. See, the weakness was just confined till yesterday when the British Gas has sold. Probably same kind of pattern may be seen that on Monday, Hexaware will again be rolling in the range of 425 to 435, and I won't be surprised even on the expiry seen happening at 440, 445 or 450, and then maybe thereafter the positive view, because all these mid-cap IT stocks we have been holding positive view, and in fact we have been advising that it won't be a bad idea to shift from the larger IT stocks, maybe like Infosys and even TCS, to move to these mid-cap IT stocks. And in our view, this sailing of 8.5%, 9% stake having made by Baring today is giving an excellent entry point into Hexaware at the current level of 430.
Okay, Mr. Tulsian, thanks a lot for joining us today. Have a good weekend. We'll have a conversation with you on Monday. Big move happening on Reliance Communications right now. There's a bondholder settlement where they're going to receive up to $300 million. So that's the reason that you're seeing this big move on Reliance Communication. Just put that intraday chart on that. So almost approaching 1980. I don't know whether this is a rally which will be sold into or not, but
well, I guess it's a huge relief, Anuj, right? Because now with this happening, at least the sale to Jio, the rest of the pieces of the puzzle will hopefully still fall in place, and we won't have any more speed breakers.
I don't understand the ADG group, frankly, Surabhi. I don't know who can, and honestly speaking, we are in the dark. I mean, I don't know how this news should impact and whether this news deserves this kind of up move, that 4% move that you're seeing. But for whatever it's worth, the stock is up 4%.
I guess the hope is that the sale is going to go on, and right now bondholders should not create a further sort of an impediment.
In fact, if we still have Mr. Tulsian, or okay, we don't. Okay. Amrish, your thoughts on this?
I mean, you talk about Reliance Communication from an investment perspective. It's always a play. Whenever there is news like this, it can move up possibly 25, 30, 40%. I think one should just utilize that to reduce your losses. I think most of the people who are holding Reliance Communication are only looking as to how they can reduce their losses, not really make profits. So news like this can take it up to levels of about 21, 22, but surely not beyond that 24, 25 levels. I think at those levels there will be a lot of selling. Last time also we've seen that it moved from that 9, 10 levels to close to 21, 22, and then it came off. So I think one should only play this and try and reduce the losses. I think maximum one can do is possibly keep trading between this region of 14 to 20, 21 to reduce the losses.
Okay, that's Arcom. Surging away, lots of mid-cap stocks actually showing some signs of life. There's Dish TV, NBCC, India Cements. There's a fair amount of flair in the market on the upside as well. Okay, now let's move to our next conversation. Joining in is Rajesh Kothari, who manages money at Alpha Accurate Advisors. Rajesh, good to have you on the show. Thanks for joining in. I was going through your latest strategy note, and it's interesting because you've cited a couple of headwinds after this big rally, one of them being this whole trade war issue and what's happening to global markets. And I believe because of this, you are reducing your exposure to US-facing companies. For instance, Bharat Forge, you're selling out of names like Bharat Forge. So you don't think this is just a temporary issue? Because, I mean, something like Bharat Forge is a very big marquee name if you are taking the call to pare your position there.
See, I think investment management is all about not only wealth creation, but is also about risk management. And in this year, over next 2 to 3 years, we believe there are a number of risk factors which are going to hit market or already hitting the market. And trade war risk is one of that major risk. So the companies which are going to be impacted by any of that risk measures which we have listed down in our AAA insights, we are becoming very cautious and conscious about it. And we are changing our investment portfolio basically to mitigate such risk which may come over next 1 to 3 years.
Okay. Rajesh, hi. Good afternoon. So, what kind of stocks are you backing right now?
So we remain, positive on the auto ancillary space. I'm sure you are aware that we've been quite bullish on this space from last probably 3, 4, 5, 8 years. We've been fairly positive on specialty chemical space, which we identified 1.5 years back. The consumer space remains one of the favorite theme, whether it's a durable, FMCG, whether it includes consumer-facing, private sector banking and finance. And on select basis, we have turned positive on healthcare. There is a pharmaceutical names, particularly from month of March onwards, post 1 or 2 large companies getting the clearance for FDA. So these are a few sectors on which we are fairly positive. The first quarter earnings growth has also started with a overall good note, particularly for the themes which we have been talking about. So the portfolio reported quite healthy double-digit earnings growth even for first quarter FY19. So I think as more and more spending will happen from government in an election year, as you will see a little bit higher capacity utilization, the operating leverage will keep coming in. There will be some concerns on the raw material cost front because the inflation is also started hitting hard a little bit on corporate India. So I think we have a fine balance between the two, and we are basically betting on companies where there is going to be revenue growth as well as very strong earnings growth with a very low debt to equity ratio, because the interest rate risk is another of the major important risk in our view over next 12 to 24 months.
Okay, before we take the next question, just keep an eye on NIIT Tech. Just looking at that stock's intraday graph and the kind of volumes which are being generated right now on that. That's of course the cash action. If you see the future split also, there's quite a bit of buying which has happened in the last 5 or 10 minutes. So just thought, I'll point that out, Surabhi.
Okay, so volumes picking up on NIIT Tech. Rajesh, you seem to like NBFCs, but what kind of NBFCs? Again, valuations are pretty elevated here. So are you sticking to like big names like Bajaj Finance on the consumer finance side? Are you looking at CV financiers, housing finance companies? What part of the NBFC universe?
So basically, housing finance, as a theme which we have avoided almost from last, I think, 1.5 to 2 years. And we are positive on all other consumer financing, whether it includes the one of the name which you have mentioned, or whether it is a rural financing names like one of the large rural NBFC, say for example Mahindra Finance, or for example the commercial vehicle finance. So these are the themes on which we are positive. One of the name which you mentioned, and you said that valuations are already touching high, but you also need to keep in mind the earnings growth and the asset quality of these NBFCs. So for example, one of the large NBFC which has been recording all-time high every day has reported 55% compounded earnings growth in last 8 years, and the market cap has also reported 56% compounded market cap growth in last 8 years. So market cap growth and earnings growth are in line. So it is not that market cap growth is significantly higher than the earnings growth. Then you would be right in saying a little bit cautious on the name. Otherwise, I think it's fine. So we are very conscious about earnings growth with the asset quality. So all the names which I've been mentioning, which we are holding for our PMS client, kindly put in your disclaimer, are the companies where the asset quality is under tight control, very superior asset quality, very superior return on net worth, high ROA, and importantly, high earnings growth.
Okay, you are positive on select pharma names. Can you tell us which ones do you like? Because the move so far has been top down.
So right now for you are absolutely right. So it is a both top down and bottom up approach. So we believe that the pricing pressure which the US pharmaceutical companies they were facing from last 3-4 years, now we are entering into the last leg of that pricing pressure cycle. So you have seen significant I would say decline in pricing environment. The decline continues, but it is now moderating. So instead of double-digit price erosion, now it is going to be low single-digit price erosion, number one. Number two, there are many of the pharmaceutical companies where FDA issues are now resolved, and we are positive on those names where FDA issues are completely resolved and the fresh supply is going to start from the plant. And third most important thing is the product pipeline, the approval. And this approval list has been quite, I would say, very, very company specific, because there are companies which have received a number of approvals in last 12 months. And on the other hand, there are companies that have been waiting for approvals almost from last 2 years. So companies which we are positive and we are holding for our PMS client is of course a large company with Sun Pharmaceutical and Cadila Healthcare. These are the two companies which we are holding in our portfolio. Cadila probably has got the highest number of approvals in FY18 compared to probably any other pharmaceutical company in the country, and we believe that it is this product pipeline which will help companies like Cadila to deliver high revenue growth and therefore high earnings growth over next 2 to 3 years.
Okay, so that's your question, or that's your sort of stance on pharma. Just before we thank you, Rajesh, big debate in the market around PSU banks, on corporate banks. The rally seems to be kind of taking a bit of a breather now. Would you buy names like Axis, ICICI, or the larger PSU banks for that matter?
Well, in PSU names, we are holding
corporate banks. The rally seems to be kind of taking a bit of a breather now. Would you buy names like Axis, ICICI, or the larger PSU banks for that matter?
Well, in PSU names, we are holding State Bank of India, the largest bank in the country, because we believe that as number of PSU banks are not able to lend due to they are under what I would say that restricted list from the growth perspective. SBI is one of the largest beneficiary of that, so we are positive on SBI. Other corporate banks, we have not yet taken any large bet on that. We believe that the consumer facing private sector banks will keep delivering higher earnings growth compared to corporate banks. Please remember, in corporate banks, people are focusing that the worst is over. But the worst is over is a statement from last so many quarters. And if that worst gets stabilized and therefore one wants to bet, I don't think we should do that, because worst needs to improve significantly, from a slippage ratio, from very high single digit slippage ratio, it needs to come down to very low single digit slippage ratio with a very high recovery and high provision coverage. So we are watching that list interestingly, and we'll see, but right now we are not holding any of them.
Okay. Rajesh, thanks a lot. It was good talking to you as always. Have a good weekend. That's the view from Alpha Accurate Advisors. BHL, by the way, has moved to the high point of the day, even while the market's struggling a bit. So the Nifty is defending 11,550. It went below that momentarily, but sort of tried to reclaim that 11,556. IT, especially a couple of these IT names in the mid-cap basket, are making beautiful moves. So that's trying to support the market. We'll take a break, and up next, of course, we have the BTST calls from our technical. Welcome back. The market's trying to defend the low point of the day, but not saying much because it's traded around that 11,550 for better part of last hour, and the Bank Nifty under selling pressure, especially HDFC Bank, which is quite interesting because that's leading the Bank Nifty lower. HDFC Bank right now at the lowest point, and of course there are PSU banks as well which are making lows.